Friends, Aaron again here with Logical Loan, where we talk all things mortgage loan and real estate. Today's topic is about being declined. Oh no, have you been declined? Or maybe you're about to be declined. I want to help you guys to prevent being declined and move into the approved category for your home loan, right? And to avoid any potential ticking time bombs that might be around the corner. Or if you've been declined, then we want to work on some of those potential ticking time bombs down the future, right? So you can just move right around those, avoid them, set them aside and be able to get that approval. Okay. So here's some basic stuff that I'm going to say, don't do these things, and they'll help you to have less snags, less headache, less heartache, less anxiety. Let's jump right into it. Number one, don't allow too many lenders to pull your credit. If you are working with a mortgage lender and that lender pulls your credit, because they have to, of course, to get you pre-approved, after that, if you then go out to a bunch of different places, like let's say you try to get a car loan or you go for credit cards and so forth, generally speaking, that can hurt your credit score. It can bring your credit score down. That can potentially put you in the declined category. Now, it's not in every case. And as a matter of fact, there is a law there's a rule or regulation guideline, if you will, from the Consumer Financial Protection Bureau that states that you have 45 days to shop. So if you're working with a mortgage lender or your and you have them pull your credit, potentially you could have other lenders pull your credit within a 45-day window, and that should not impact your credit score any more than just the one time. However, if you begin to go to other places for things like car loans, personal loans, credit cards, maybe even payday loans and things like this, those things can very much impact your score, and they can affect your ability to get a loan. So that's a big one. Don't have too many inquiries on your credit when you're in the process of getting a home loan. That can just put the brakes right on the loan, or it could potentially make your score go down so that maybe you're still qualifying, but the loan itself becomes more expensive because loans are based on risk. And if it looks like you're a higher risk to an underwriter or to a lender, now your loan is more pricey. So that's number one, okay? Number two, don't miss any payments on your credit. This is such a no-brainer, but so many times maybe someone forgets to make a payment and we're right in the middle of a loan process. Maybe we're right about to close, right? We're 30 days or 45 days in, and they say, oh my gosh, Aaron, I forgot to make my car payment, or I forgot to make my credit card. Well, in many cases, through the process of getting a home loan, the underwriters will pull the credit again to refresh it, make sure that everything is good. And if now they see that you've missed a payment, you're past 30 days, that can put a stop to the loan process. So a big one is make sure that your credit is in good standing and you don't rock the boat too much during that process with either your credit or your financial situation, or even the house if you're a current homeowner, right? If you do that, that can potentially make the underwriter say, hold on, wait, we can't do this loan, or maybe we have to wait for something. So that can put a stop, right? Be careful with the credit. Super important once again. Next one, don't spend your savings. I can't tell you how many times somebody has funds for, let's say, their down payment, their closing costs, anything that's necessary financially in the process of doing a loan, but then they go and they spend that money. Now, maybe they planned on putting that money back, but what happens is they spend that money. That money is now gone. The underwriter asks the question, why is that money gone? And then the person either can't replace it, so now we can't move forward with the loan because they don't have enough, let's say, down payment, or maybe they just don't have enough money in reserves. And oftentimes reserves are required to fund a loan for mortgage. But also, maybe they no longer have those funds, but maybe they're going to put those funds back. But when they put those funds back, now the underwriter is going to want to source those funds. Okay. This brings me to the next one, which is don't put cash in your bank. Okay. So these two are kind of tied together. Underwriters want to source funds. They want to know where your down payment money has come from, typically. So if you take cash and you put that into your bank during the process of getting approved for a loan, right? Then the underwriter is going to look at that and say, where did this money come from? And now it may be the case that you can't use those funds, because if you can't properly source those funds, the underwriter is just going to put a stop to it and say, declined, right? So be very careful what changes you make to your bank account. Now, there are changes you can make, but you'd want to make sure you talk to your lender first. If you have questions about this, in the description box below, my contact information is there. Just call me and I'll help you through it. Okay. There's a lot of rules and regulations and guidelines that a lot of the public don't know about when they're trying to get a home loan. And most of you out there are only trying to get a home loan like once every 3, 5, 7 years. So maybe you don't know the things that have changed and stuff, which totally makes sense. But that's why somebody that you trust is important to work with, right? Very important to not make those giant changes, right? Next one, don't quit your job. Humongous. It seems, again, like a no-brainer, but I can't tell you how many times somebody says, hey, I know my husband and I were working on this loan with you, but I just couldn't stand my job anymore. So I had to quit. And then they plan on, well, I'm just going to get another job in a couple of weeks or something. I'll be fine. Sometimes that can be okay. But there's been other times where the person quits their job. Now we can't use that income, right? And maybe they quit their job and they go to an entirely different industry. Well, now that can potentially mess up the process, because there are specific rules and regulations and guidelines that say if you don't have 2 years history in a specific industry and you change industries significantly, then it may be the case that we can no longer use that income. And now it might be, boom, you're declined. So be very careful when changing jobs, quitting jobs, or doing anything like that when you're in the process of getting a home loan, okay? Next one, we just have a few more here. Don't lie to your lender. Oh man, this is crazy, because so many times folks will think, well, hey, my friend told me not to tell my lender this, that I have let's say a tax lien, or not to tell my lender that I have some debts that are not showing on my credit report. Folks, let me tell you, so many times in cases, we may have a conversation and there may be something that you don't tell me, or something you tell me that's not true. Maybe somebody coached you and told you to say this or that, or don't say this or that. And maybe it gets past me. But in all likelihood, in all probability, that stuff is not going to get past an underwriter, because an underwriter is like the referee. They're the one that blows the whistle and says, wait, stop. And they're the ones who will investigate to see whether or not this lender that they work for should give you the $300,000, $400,000, $500,000 and so forth for this loan. So they typically are going to discover that stuff that's either not on your credit report, or that you haven't disclosed through title or something like that. So honesty is the best policy when you're trying to get a home loan of any size of money, because the chances are eventually that information is going to be exposed, and it could be that we just wasted all that time. Whereas in the beginning, instead, we could have just said, let's disclose this information. And if there's any hurdles or snags in the way, any roadblocks, let's fix them and then just move from there. That's the best way to do it. So again, don't lie to your lender. Don't even lie by omission. Don't withhold information. Instead, do the opposite. Give as much information about your financial situation as you can so we can deal with problems and close on time. This is especially important, of course, if you're buying a home, because you don't want to get right down to closing and you've got this wonderful home you're about to purchase and now we can't buy it. And then we're declined. So let's stay approved and not get declined. Okay. The next one, don't ghost your loan officer or your lender. Sometimes this happens on accident, but I can tell you, in the process of getting a home loan, usually what happens is I will take an application and then I will pass that application on to my lender's office, whichever lender it is, and also my processor. Now, my processor is usually going to speak with you. And in that process, if all of a sudden the communication is cut, that now slows down the time. So let's say, for example, we only have 30 days to close, and there's a hard stop on that 30 days to close. Well, if you stop communicating with me with the processor, with an underwriter, or with anybody in that chain, right? Then all of a sudden they can't move forward with the loan. And we could potentially lose precious time. And then all of a sudden our closing could be late and we possibly could not close the loan. So that's very important to make sure you have your phone on at all times, especially once your loan is locked and you move forward. Don't ghost. Make sure that you're actively communicating with all the people in the transaction until closing happens, because time is of the essence typically in these scenarios. The very last one, of course, is similar to this, but don't put things off too long. This subject actually specifically relating to being pre-approved. If you have a pre-approval, right, it's usually there's a time window on that pre-approval. Now, it's not a big deal, but if you have a pre-approval and it's only good for 90 days, right, if you put things off, right, then 90 days later, it could be the case that you actually go from being pre-approved to not being pre-approved, to being declined, because maybe something in your situation changes, right? Or you can't be pre-approved anymore. I've definitely seen this happen where somebody's really excited, they got pre-approved, but then they get preoccupied in their lives and they go do something else. They don't actively search for the home that they're looking for example. They kind of just put things off. And then later on, they're no longer approved because something changes. And then they look back and they regret it. And they say, dang it, I should have taken that, those last 60 to 90 days and actually found a property. So don't put things off is a big one, because that could potentially move us into the decline category. All right, that's it for today. Again, I'm Lietz with Logical Loan. You guys, thanks for watching and have a great one. Talk to you soon.